The idea of what we're going to do this morning is to get you ready to meet with a lender, to find the different sources of funding that are out there, and then to be prepared when the moment comes that you can pitch yourself in such a way that someone's going to want to say yes to you, right? That's what it's all about. We want someone to say yes to us, and it's a matter of, setting yourself up and looking right and doing the right things to get them to say yes to you. What we want to do is take the risk out of it as much as possible. Lenders are here today, right? A lot of you have appointments with lenders already, and our job is to, and the lenders want to say yes to you, right? They're in the business of loaning money. Okay, so it's good. We're all in the same place for the right reason, because they want to lend money, we want to get money. There's a match. Our job, I suggest, is to make it as easy as possible for them to say yes to us. Now, I know we're in San Diego. It is a fact. It is the greatest city in the history of mankind. And if you know the second half of that Ron Burgundy joke, you will know why I'm not going to say the second half of that joke. But it's a great city. I grew up just up the street in Orange County and had family down here who owned a small business. In fact, I'll tell you his story in a second. I'm reminded, though, of two PhD students, right? As I talk about getting yourself ready, who weren't quite ready when their moment came. So these two guys went to Stanford in the 90s, and very smart guys, right? Obviously, they went to Stanford, uber smart guys. And they had this idea for an internet business, and they started palling around, working together. They weren't really great business people. They were brilliant engineers. And so they created this algorithm. And this algorithm was able to do things that other similar algorithms couldn't do. And they started showing it around to different people, almost as a lark. Like, hey, look at our PhD program. Look at our, what we're doing. Well, one of the people they showed it to was a investor, the guy who'd created Sun Microsystems, Andy Bechtolstein. Andy Bechtolstein loved this algorithm so much, loved these two guys so much, that he whipped out his checkbook and he wrote out a check in the amount of $100,000 to Google Inc., right? Because this is Larry Page and Sergey Brin I'm talking about. Wow, they were so happy. They got the check. The problem was they were getting ready to go to Burning Man, number one. So number two is they had no entity called Google Inc. They had actually never even incorporated their business. So they had this check for $100,000, and they could not cash the check. So what did they do? Well, they went to Burning Man, had a good time, burned down the man, and came back and spent the next couple of weeks incorporating their business, and then they cashed their check, and that is the first funding that Google ever got. Now, back here in the real world, okay, that's not going to happen to most of us, right? No one's going to whip out a check for $100,000. Far more likely is like my uncle, who owned a consignment store here in San Diego. And how did he get funded? Well, he had saved up some money from his previous job. He went to friends and family, including my dad. A couple other people invested in him. And then he went to a bank, and he got an SBA loan. Right, so he cobbled together a couple of different sources. SBA loans, his own personal savings, friends and family, got enough money to put together, and now he's got 3 different consignment stores. So, very successful. There's a couple of different ways you could do it. You could be a genius and get a big check, or you could be like a real person and, do what we're going to do, which is get our businesses ready, learn what we need to learn, and, then go about and get the funding. So it's going to be a really interesting day. We have some great panels for you that will talk about traditional lending, alternative lending, crowdfunding, equity financing. There's not a lot of good things to be said about the not so great recession, as I like to call it. Right? They all call it the Great Recession. It wasn't so great, as we all know. One of them was some new alternative forms of lending came out of that. Crowdfunding, so different equity things, smaller microloan options, things like that. So we're going to be learning about that today. We're going to have some spotlight videos that will put this into practice. And then when it's all over, we can meet in the back. You can meet with your lenders. If you don't have an appointment afterwards, we'll help you set up one. And if you think you're not ready, by the way, to meet with a lender, wrong. You got to practice. Practice, practice, practice. Even if you're not ready, just meeting with a lender will help you, because the lender will let you know what you need to get ready to really meet with a lender. They're there to help you. So help us help you, to quote a second movie, right? There's Jerry Maguire. So I would like to call on the stage to start with my alternative and traditional lending panel. Come on up here, you guys. Come on. Here we go. All the way down. Great. And if someone could bring me a glass of water, that would be really great. Oh, there's one down here. All right, so I'm good. So before we start, before we introduce ourselves, we're going to watch 2 quick videos. So let's do that.
Hi, I'm Chad Berkey. This is Jeremy LeBlanc, and we are co-founders of Tin Play Precision Pour Flare Tins in San Diego, California. And the gist of what we've done here at Tin Play is we've taken all the existing bar tools that bartenders have been using for years and years, and we found a way to make it better, more efficient, make more consistent drinks, but mainly save bar owners money.
We started Tin Play in 2013. Chad and I, pretty much exhausted everything that we had in our own bank accounts. But at that point, we definitely knew that we needed more funding. We actually went into Comerica Bank, and they were great with us. They actually walked us through all the steps, and they tried to get us some funding, but we just didn't qualify, and we weren't ready at the time. At that point, we definitely knew that we had to go and find some alternative funding. Chad actually went to an event and found out some alternative funding besides some of the bigger banks, and that's where we found out about Axion. We sat down with one of the representatives of Axion, and they helped us out, and they brought us through all the steps, the proper steps, and they were great through the whole process. Yeah, I truly believe that, without the help of Axion, we wouldn't be at the stages that we're currently at right now, because they were able to help us out quickly. They made it easy for us, and we got the money that we asked for. We got the full amount, and we were able to put that money right into getting our product out there, and we made our deadline for one of the biggest shows that we have in Las Vegas, and it worked out really well for us, so we're really happy on that.
Yeah, we really wanted to be one of those pictures of the success stories that they have in their office right there, with people that lended to them and then they've made it.
We're on our way.
When we were walking out of the building, we said we're going to have our picture up there someday. So I don't know, are they ready for a picture yet?
Almost.
Hi, my name is Ryan Foster. I'm the owner of Mission Bay Pet Salon. We've been in business since March 2010, and we are located in North Pacific Beach in San Diego, California. We are a full-service pet grooming salon. We originally received a loan in October 2011 with CDC Bank. Early 2014, we wanted to go ahead and refinance our loan, get a lower interest rate, and establish ourselves with a traditional bank for future purposes. And so I actually just walked into Comerica. Immediately we started looking at, collecting information and filling out some paperwork. She actually told me that a bank like CDC would end up referring me to a traditional bank such as Comerica after an SBA loan. And from filling out the paperwork till when we were able to go ahead and get the loan, it was very quick, within just a few weeks. Once we were able to obtain our loan from Comerica, it actually lowered our monthly payment, and we actually did a remodel here and was able to grow the business. I was able to purchase additional equipment, change around some of our logistics here so that we could fit more business in and take more clients. So it really helped out because it dropped our payment by over a third. But it's been great. It's been great. Comerica knows that down the road that I would like to go ahead and grow the business into multiple locations, and so we want to go ahead and establish that relationship.
So the name of our panel is Traditional and Alternative Forms of Lending. And Dun & Bradstreet Credibility really worked hard to put together a quality group of local people who know this topic very well. So, so I'm Steve Strauss. I'm the host. I write for USA Today. I also am an entrepreneur. I haven't had a boss in 20 years. I run a website, as Judy had mentioned, called The Self-Employed. And I also wrote a book a couple years ago called Get Your Business Funded, Creative Ways for Finding the Money You Need. So this idea of how do you get your business funded and alternative options, things like that, it's something I know pretty well, so I'm happy to be part of this. And Valerie, why don't you go next?
Okay. My name is Valerie Belloso. I am the Business Development Officer with Accion San Diego. Accion is a nonprofit organization. We are a micro lender, so we provide flexible loans as low as $300 up to, actually we can consider deals up to $75,000. In addition to the lending, we provide additional business resources, facilitate one-on-one business counseling, provide training opportunities, and so we really try to be a hub for business resources and obviously financing as well.
Great. My name is Susan Lamping, and I'm with CDC Small Business Finance. We actually financed Ryan to start his business. So it's exciting to see that he's moved on to a traditional bank, which is really summarizes sort of what we do. We're a private nonprofit organization that makes loans to businesses that are viable, that have some strengths to them, but that just aren't quite strong enough for bank financing. So we'll do loans to startup businesses, to projection-based requests, to folks who have some credit issues, those kind of things. Our sort of sweet spot is loans anywhere between $20,000 and $250,000 in financing, and our goal is to grow your business to the point where we can refer you on to a traditional lender.
Great. Maria?
Hi, my name is Maria Hughes. I'm a lender relations specialist with the Small Business Administration, which is a federal agency. What we do is basically kind of serve as cops. We tell you where to go and how to get there and with who. Basically, when people come to us for assistance, whether it's by phone or email or in person, we direct them either to the CDC, which is one of our resource partners, or to Accion or wherever else that they might need the assistance. We do not do any direct lending. We only guarantee loans. So that's really important to know. So if you ask me where can I go, I cannot give you that information, because we're not allowed to. However, I will refer you to the CDC, which can then package your loan and send you to whichever lender would be there. I'm also the Veterans Affairs Officer, so we work with veterans in starting their small business, help them get on the road.
Good. Dan?
Hi, good morning. I'm Dan Adams. I am the Business Banking Manager here for Small Business Lending in San Diego for Wells Fargo. Wells Fargo, somebody picked me out in a suit out there and said, oh, you must be Wells Fargo, so I guess we're the traditional lender. But we really operate as a small little community bank within the bigger Wells Fargo, providing everything from $50,000 in startup financing up to $20 million commercial real estate lending, as well as other banking services.
Super. James?
Good morning, everyone. My name is James Hunt. I'm a business specialist at Comerica Bank, another traditional lender here in San Diego. My role with the bank is basically meet with small business owners. We take a really long-term plan with our business owners. We'd like for you to think of us as a trusted advisor when you walk into one of our 15 locations here in San Diego. Just working with you, planning your financing from startup all the way to your growth phases is important to us, and building those long-term relationships starts by walking into one of our offices and going from there. So looking forward to seeing you guys later on this afternoon.
My name is Jeremy LeBlanc. I am a co-creator along with my business partner Chad Berkey of the Tin Plate products that you just saw. Just here to talk to you guys and give you my experience.
My name is Ryan Foster. I'm the owner of Mission Bay Pet Salon. I actually started my business from my garage, and when I wanted to grow the business, I didn't have any clue where to go, and I actually called Wells Fargo first. They referred me to Susan Lamping with CDC Bank, went through that process, and then recently refinanced our loan with Comerica.
Okay, great. What we're going to do is start first with this idea of traditional lending. So, Dan and James, just let me ask you, what do you look for when you look to give a loan? How big of a loan? How small of a loan do you give? What are the criterion for the small businesses that you work with?
So what we look as a traditional bank, and again, as a large bank, we have a lot of different ways of going. So Typically, though, what banks are looking for is predictability. I think we're going to hear that from more than just traditional banks, though. So as many data points as you can possibly have as far as background, experience, a true business plan. In pure traditional conventional lending, we want to have a lot of data points as far as a history of profitability to make sure that we can get paid back. But at the end of the day, that's what banks look for is the predictability to make sure that we get paid back.
And I would add to that, generally some banks differ in the type of industry they prefer, although we lend to all different industries. You know, some industries are more profitable, some industries have special risks that are innate in what you guys do out there. So we're looking to hear the story, find out, like Dan said there, the history of revenues is important because that predicts the future. And if you've been able to manage your funds and your expenses over 2 years, a traditional bank's willing to sit down and listen, to hear your plan, and to try and move forward with some financing for you.
So what are some of the mistakes that you think that you see most often small business people make when they come to see you? Unprepared, they don't have their financials right. What do you think it might be?
You know, I'd say,
and I can open that up to all of us, really.
On the Wells Fargo side, you know, not so much unprepared, because there's a point where you're over-prepared. The most common mistake that we see amongst, especially a group that we have here this morning, is somebody who just doesn't engage a banker early enough, doesn't engage the right banker early enough. They'll have exhausted all sorts of crazy resources, and they get to the point where they're almost desperate. So I think from the standpoint of a plan, start with a plan, sit down with a banker. Even if you can't get financing from the bank at that point, at least figure out where your milestones are, where you're going to come back to that bank. And again, we all know each other up here, so you heard, it starts with Wells Fargo, ends up at Accion, and then goes over to Comerica. It's a real nice relationship that we can build on and help your business succeed.
Can I add one thing to that? So I do also a lot of work with Bank of America. I do a lot of events around the country with Bank of America with their lenders. And one of the things they always tell me, and which I will tell you, and it's something you just said, is start early. You know, as you're drafting your business plan, while you're thinking about how much money you need, go in, create a relationship with your lender, with your local lender, with someone you meet here, with someone you're going to meet in the back later today. You just create a relationship and find out what they want to see from you, because what you think you might need to come up with, and if you just walk in one day and say, here's my loan package, may be very different than what they're going to want to see. Especially, it's even better if you got to know them and they put a face to the package. And right, business is all about people and relationships. So I would suggest real strongly that you create that relationship early in the process, because it'll go a long way into helping guide you to get you where you want to go, and to get them to know you well enough that they'll be more inclined to say yes than no, as long as all the numbers crunch. Yeah.
I was going to say, yeah, definitely when you start the planning process, you know, as bankers here, we've done so many applications. We know our credit policies and what our companies are able to do for you. So the power in your hands is to come and sit down early before the financing need is there, and to learn a little bit about what you need to do. You know, to use us as advisors when you're sitting down with your CPA and preparing your financial reports. Okay, well now this clicks because James said I need to show this much revenue, I can do this percentage. And so you have that power as you're planning your 12-month, maybe 5-year plan for financing.
And let me know, we're going to take questions the last 15 minutes of this event. So if you have questions, just hold on to them, and then we'll either have you come up to the microphone or move microphones around. So half hour or so from now. Ryan, why don't you talk about your experience going to Comerica?
Just to kind of go off that, at the time when I saw Susan, I only had one tax return for my business at that point. I was pretty prepared with a business plan, but it's not like I had years of history to show. So we worked together on it, and she actually made a comment that you had previously funded something in the pet industry, so you know that you had success with that, and that helped.
So let's talk about SBA loans, because they've come up a little bit, Maria. Mm-hmm. So the thing is, the SBA doesn't make loans. Can you explain how an SBA loan guarantee program works?
Okay, well, when people come to us and ask us for a loan, what I usually ask them, the first thing I ask you, how much money do you need? My second question is, what's your credit like? So depending on your answers, where I will send you to. But what I strongly suggest is that you contact one of our SCORE counselors, which is a Service Corps of Retired Executives, except they're not all retired these days. And they do counseling, because to me, I always say your bank is your last stop in terms of when you're putting a business plan together. So you need to get, a lot of times you need to get help to find out how much money you need. You might think you might need 50, you might need more, you might need a little bit less. So what I do, I usually refer you to a score counselor to set up an appointment so you can figure out with some assistance as to how much money you really need to ask for and get your business plan in place. And then once that's in, or if you're already at that stage, I will refer you a lot of times to the CDC, which can then either put you into one of their programs, because usually people need anywhere between from $5,000 to a couple of 250 is more the usual type. Or I might send you to Axion. If you tell me you've had credit issues in the past, I'll send you to Axion. And that's how the process normally works. And then if they decide to either make the loan or to refer you to another bank, the bank will then make all the credit decisions. Then they go to SBA to get a guarantee number. Then you're in our system. Prior to that, you will be with the bank, whichever one you're working through. And they do all the processing. They decide whether they want to do business with you or not. But that's how SBA in turn works with you.
So the SBA, I would have to say, is one of the best friends your small business can have for all sorts of reasons. If you're a fairly new business, you're doing a startup, or you're a couple years in, getting a loan can be a little more challenging because banks rightfully want to make smart loans to people that they know will be able to pay them back, and startup loans tend to be a little riskier. So what do? As I said when we started, you want to reduce that risk to the extent possible. One of the ways we reduce that risk is by getting an SBA guaranteed loan. So if you can go to a bank and say, hey, I'd like to get the loan and I've got an SBA loan guarantee behind me, well then the bank knows, oh, this is a great loan, because either the borrower is going to pay me back, or if the borrower doesn't pay us back, well then the SBA guarantees and the SBA will pay us back. So the SBA makes it such that you can have maybe a little bit lower credit score, or little dings on your credit, or what, you might have a unique situation for whatever reason it is, and still be able to go out and get a loan. So that's why the SBA is really these guaranteed loan programs. They have all sorts of them, from small, $30,000 micro loans up to millions of dollars for funding of, manufacturing products and things like that. So there's a lot of SBA programs. So along the same lines of alternative lending, why don't we talk to Axion and tell us how you guys work all together different, right?
Absolutely. So first of all, Axion is not a bank, so we're not a depository institution. So that's why it works really well to work with our banking partners to be able to fill in that missing component, right? You have your whole banking relationship with your bank, and in the event that you're not eligible for a loan through them at this time, Axion could be a good alternative for you. And so our underwriting criteria are the most flexible of everybody here on this panel. Maria mentioned about credit. We don't have a minimum credit score requirement, so we are able to help people who have had some challenges due to the not so great recession, as you mentioned, or mortgage challenges, whatever that might be. We have some more flexibility. The main thing that I would suggest is just really knowing what your credit looks like. There's a great site called annualcreditreport.com where you can go and pull a free credit report once a year from each of the 3 agencies to know what's being reported on there. And I think it's smart practice to know what's on there before applying for the loan and having us tell you what's on there if there's something negative. Plus, it gives you the opportunity to clear up some of those items, or at least know what the story is behind them, right? So if we see some delinquencies, and you can let us know what it was that happened. And so a lot of what we do is based on that character, on that story. We dig a little bit more, a little deeper when it comes to that aspect of things. We obviously do want to see that you're able to make the payments on the loan. We don't want to put anybody in a jeopardizing situation where you can't take on an additional debt payment. And so we'll be pretty creative in taking a look at what your real cash flow situation is at the time that you apply. And we do that by looking not only at your tax returns, because sometimes we work with people who have, Jeremy, they were not even 1 year in business, right, at the time that you came to us. And so sometimes there isn't that history of established financials for the business. So we're able to look not only at the tax returns, potentially at some financial statements, but also at your bank statements. How much money is left in there at the end of the month? What other outside sources of income do you have in addition to what the business is or may not be generating yet to support your current existing expenses and a payment to Axion? right? Plus whatever we're projecting to make from what we see on your business plan if you're a startup. We could see what your projections are as well. So we get really creative in putting everything together to assess how the loan is going to impact your future cash flow, but obviously what your real cash flow is right now as well. So those are, I think, really important things: credit, cash flow, and obviously character.
So, Maria, let me ask you a little bit more about Axion loans. So, how little can they be? How big can they be?
Yeah.
How long is the process? What kind of interest rate should people expect to pay?
Great question. So, our loans start as low as $300, and they go up to, everything is going to say $50,000, but we're doing a pilot right now where we can consider deals up to $75,000. You saw the BBQ tweet that was up there from our member office in Chicago, did a $5,000 loan for their first food truck, right? So some businesses don't require a huge amount of capital to get started or to grow. So 300 up to 75,000. Our rates are the highest of all of the lenders here. We start at 10%. We go up to 18%, and it's based on your credit score. So obviously the lower credit scores would get the higher rate. However, there are no prepayment penalties because our goal is to have you transition out of our program so that you can get a loan with a traditional lender, or maybe with CDC as you move your way up to being able to get a loan through a traditional lender. And the turnaround time, I think that's a great point. It's important for you to know with any lender that you're working with, how long is it going to take me to get the money, right? So you could plan accordingly. With us, it'll take approximately 2 to 3 weeks once we have your complete packet of information. So it's important that when the ball is in your court, that you're as complete and thorough and organized as possible to get all the paperwork to us so that way we can get going on the underwriting and get you a loan promptly. So, yeah.
Let me ask all you guys a quick question that'll help us know what we're talking with. I want to know if you are looking for $50,000 or less or $50,000 or more. Okay, so $50,000 or less, raise your hand. Some of us, okay, $50,000 or more, raise your hand. All right, that's so almost 50-50, a little bit more with the bigger. Well, Jeremy, let me ask you, you got an Axion loan?
I did,
right?
yes.
So how did that work?
It worked out excellent. Chad and my business partner, me and Chad, we got a lot of our funding from family and friends, but we needed that little extra. We did go to our traditional bank, and we weren't quite ready at the time for that loan. We went over and we met up with Nick and also Valerie, and I tell you, it was great. It was a great experience. We went through the whole process, and I never thought it could be that easy. When I say that, the application came back and it went back and forth, a couple times, but it was such a smooth process. These guys helped us out, every step of the way, and we really couldn't be more, happy with the loan that we got. We did get the full loan that we asked for, and I believe it only took a couple weeks for the whole process to go through. We met our deadline for our manufacturing. We had one of our biggest events of the year. And we met our deadline right on time. Our first shipment of a product came in from China, and it just it went really smooth. I tell you, we really couldn't do it. We couldn't have done it at that time and move forward without Axion.
So, did you work with Valerie? Did you work with somebody else?
Worked with Nick and got introduced with Valerie later. Yep.
And how long did your loan last for? Did you pay it back, or did you renew it? How did that work?
We're still paying on it currently. We've only actually been in business since last March and growing very much so. We're probably going to be looking for another form of loan coming up here soon as we get some, the company's actually growing right now, and we're working with campaigns with Jim Beam and a couple of other larger manufacturers. And so, the company is starting to grow, and we don't want to grow it too fast. It's a product that can be in the bars and also retail. But as retail, it's it's kind of a dangerous place to go right away. And but we still have our eye on it. And so we're a small startup business that wants to grow accordingly. And I think I'm on a panel with some great avenues to actually bring that forward.
Super. Well, Susan, why don't you tell us what you do? How do you work in the alternative lending world?
Right. Well, similar to Axion, we're a private nonprofit organization, And so we make loans that are strong, viable loan requests, but they're just under the banking radar screen, that aren't quite strong enough for bank financing. We do a lot of startup loans, like Mission Bay Pet. You know, they were a startup when we funded them. A lot of the larger banks aren't willing to do startups, so I'd say about 30% of our portfolio are startups. And you had asked earlier, you know, what are some of the pitfalls or mistakes that business owners make? So I want to address that in terms of startup business financing. A lot of times, I would say the primary reason that we decline startup business loans or early stage business loans is due to cash flow, but it's not the cash flow of the business, it's your personal cash flow. So if you're starting a business, you need to make sure that you have some outside source of income that's going to pay for your personal living expenses. Lenders don't like to pay for your food and your rent and your mortgage and your gas and electric. They want to pay for your business. They don't want to pay a salary to you. So if you're going to take out a loan and you're going to require a draw from the business from the get-go, what that really is saying is you're taking a loan to pay yourself a salary. And so keep that in mind. You really want to have some outside source of income. Either you have a part-time job, you're keeping your job, you're married and your spouse has outside income, maybe you have rental income, real estate, investment income, maybe you have liquidity. You know, maybe you've saved enough money to live, I would say for 12 months. You want to have 12 months worth of living expenses that you could pay for, saved, so that you're not required to take a draw from the business from the get-go. That's really important. In addition, you know, we also look at credit really differently than traditional lenders. Many lenders don't want to see short sales, foreclosures, loan modifications. We will lend to people with all of those things. We want to hear your story. So, you know, we want to find out, why did you have a short sale? Why did you have a bankruptcy? We want to see bankruptcies 3 years old. Many lenders, larger banks, want to see that you never had a bankruptcy or that it's at least 10 years old and has dropped off your credit report. One time I lent to someone who had a credit score in the 500s, and we did make the loan, and it was because we heard the story. He had a delivery business, and he had multiple vehicles and lots of staff that would drive these vehicles around delivering products, and they would park anywhere they wanted, and then they'd throw the parking tickets away. And all the delivery vehicles were in his name and his business name, and he didn't even know he was getting all these parking tickets because his employees would just park wherever and throw the parking ticket away. And you could see on his credit report, it's like 20 City of San Diego charge-off accounts. They're all parking tickets. And other than that, he had a perfect repayment history. So it made sense. I mean, we said, you know, you got to do something about these people that are throwing the parking tickets away, but we were able to get the story. It did make sense, and we did make a loan to them. Another reason why larger banks sometimes won't do a deal that we will do is collateral. A lot of times banks want to see collateral on your loan. If you have cash flow, collateral becomes less important to us. So we'll do loans with no collateral to service-based businesses, or maybe a business that your only collateral is inventory, so it really has limited liquidation value. We'll do a loan to folks like that if you have strong cash flow in the business or good outside income.
And can you also tell us a little bit about your CDFI? So CDFIs are community development financial institutions, right?
Correct.
These are like a micro lender?
Yeah, well, it's just a federal designation that allows people to have access to various pools of money to raise so that we can lend it out to you. And it's just yet another pool of money that we have. We have multiple pools of money. So we are an SBA micro lender where we offer up to $50,000 in financing. We have a CDFI pool where we offer up to $200,000 in financing under that program that's open just to businesses located in the county of San Diego. And then we're also an SBA lender where we offer what's called the Community Advantage Loan. So it's kind of the vegetable soup of loan programs. I mean, from your perspective, it kind of doesn't matter what product we put you into. We put you into the product that is going to best suit your needs and give you the most likelihood of getting approved. But it's just yet another pool of funds that we have to draw on.
So let me ask you a question for the whole panel, and I'll start with our banks down in the middle there. What role does a personal guarantee play? What role does collateral play? I mean, I'm an attorney as well, although I, came to my senses many years ago and don't practice anymore. But one of the things I always tell people is you have to incorporate, right? A basic rule is you have to create a separate legal entity for your business. But even if you have a corporation, often a bank is going to want you to make a personal guarantee. Do you want to make a personal guarantee? No, you don't, but you might have to. So the question is to all of you. What role does personal guarantees, collateral, those kind of things play in the lending process?
Start with that. Banks learned their lesson back in the 80s, obviously, when there weren't guarantees in place and what would happen during a down cycle. So I'm not aware of a bank that would not require a personal guarantee. Basically, when you are a certain percentage owner of the business, you'll be required to personally guarantee the loan. In our case, anybody over 20% ownership on that business should be providing a personal guarantee for their loan. Now, there are some exceptions if you're strictly a financial investor in the business, but if you're actively using the funds for the loan, then you'll be asked to guarantee the loan as well too. And it basically just says, hey, I personally promise to repay the bank this amount of money that you're giving to us. So that's simply what it means. And I'm not familiar with a bank that's not requiring those right now. Pretty much any bank's going to ask for that, yeah.
And from a standpoint of a person, it sounds pretty onerous, personal guarantee, I ask you, why wouldn't you personally guarantee it? And that's what we look at it as banks. But I think all of us would look at it the same way, whether it's in the form of a personal guarantee or it's just sitting across the desk from you. Are you in this business? Are you an investor in it, or is this your business? And,
so do you have skin in the game?
Do you have skin in the game? But even beyond that, if things go bad, the personal guarantee really is a vehicle to make sure that you come to us when things are going bad so that we can work things out. So it's a managed kind of, even if it's a decline, it's managed, as opposed to, hey, you know what, things didn't work out so well, I'm walking, and the bank will figure it out, I don't know, 3 months later, something like that. So again, I think sometimes folks worry too much about a personal guarantee as if there's a sword of Damocles hanging over your kids and your house and all that sort of stuff. It doesn't happen that way. It's just really making sure that, okay, you're in this. You're part of the business. I can't really figure out where you end and the business begins. So it's a personal guarantee that you're going to be part of that business.
Hey, Ryan and Jeremy, did you guys have to do anything like that?
I'm sorry? I believe so.
Oh.
I'm sure we did.
Yep.
Yeah, we did.
I mean, if you're not willing to do that, I mean, you shouldn't be in this room. I mean, you got to be able to put it up. Everything's risk. So.
Yeah, I think we had a lot on the line and everything like that, and they did obviously their job and looked into what we had going. There was we had funding in the bank, so I'm not sure what the exact how much they were looking for, but I know we definitely qualified for the loan that we were asking for. But we had a lot of skin in the game. There's no doubt about it. We had a lot to put on the line. I think they saw the passion of what we had going on, and that probably definitely struck an interest with these guys.
I would add to that. Basically, when you're starting your business, generally you're 100% owner, or you and a partner, you have a really tight control over what's going on. So as your business grows and you have a wider management, those people aren't as tied to the business as you would be in this initial startup growth phase. So that's why as well too, the flow of money from your personal side to the business is seamless. As you can write a check here, deposit here. The CFO of Microsoft's not going to write a check from his personal account to fund a deal that they're doing. So when you're a single-held company, the flow of funds are very close, and that also gives a reason for you're guaranteeing that because you are in total control of where those funds are going in and out of as well.
How does the SBA look at that?
Well, on any SBA loan, you will always personally guarantee, and anybody who is a 20% or more has interest in that company will also have to personally guarantee, because you have to understand that if you default on the loan, they'll come after you to make sure the loan is paid, and you'll be jointly and severally liable. It means you and your partners, whoever's on there, will be coming to you. So if you run away, the other person who's guaranteed, they're going to come after them. And really the bottom line of all that is because when the SBA guarantees loans to the bank or the credit unions, that means the taxpayer stands behind it. So if you default on it, you know, the SBA will pay the bank that amount of money of guarantee. And that means when we say we pay, the SBA, that means all of us, the taxpayer, pick up the tab. So that's one of the reasons we always get the guarantee on anyone who's got a 20% or more interest. And we'll also ask for you to, if we have 25% or more equity in your home, you usually have to put that on the line as well, depending on the amount of the loan.
Valerie?
Yeah, I'd like to just add that pretty much we're all requiring personal guarantees on the loans. And I think it's important to note that because of that, we are going to be looking at personal credit, personal outside income, personal assets. So even though this whole panel and this whole event is talking about business financing, business lending, you know, the strength of your personal finances and credit is very important because it is so integral to the whole cash flow analysis, the whole picture that we're evaluating. There's times where I'm sure you've gotten this call where you know, the call is, well, I personally have really bad credit, but I want to do the loan under my business credit, my Dun & Bradstreet, right? I want to do it under my DMB looks really strong, my business has good credit, but I personally have really bad credit, so it doesn't work that way. I mean, we're still going to look at the personal, you know, the credit worthiness of the individual because that person is guaranteeing the indebtedness of their business.
And Susan?
Yeah, it's same, ditto. You know, we require that guarantee as well. And you'd also mentioned collateral. For us, the larger the loan, the more important collateral becomes. And the weaker the cash flow, the more important collateral becomes. So if you're looking for a loan of, say, less than $70,000, we might be able to do it without collateral. If you're looking for a loan larger than that, collateral becomes increasingly more important. And again, if you're a startup business, collateral is more important than if you're an existing business that has strong historical cash flow, in which case we might be able to do a loan without collateral. We recently did a $250,000 working capital loan with really no collateral for a business that had strong cash flow, as an example.
So we have time for one more question before we get to the Q&A. And so what I'd like to ask all of you on the panel is, you know, what do you want to see? If a rock star application came in the door, you know, what should they be aiming for to get that yes that I've been talking about this morning? Start here.
Okay, well, I want to pick up on something I picked up on something that Jeremy said, which was passion. You know, really seeing that passion, that drive, and the commitment from you is, for us, always stands out. Secondly, showing that you're current with your credit is really important, and sometimes that takes a little bit of work on your part if you have some collections that need to get paid or some accounts that need to get settled. But seeing that you're working towards improving your credit and being in current status so that you can build upon that is also really important. And then just to reiterate what I think I mentioned earlier, is showing that you can afford the loan payment based on your current cash flow situation with whatever sources of income you're dependent on to make that loan payment.
And I would agree with everything and just add, and this is really important for early stage or startup businesses, experience. I'm always so surprised when someone comes to me and wants a business loan to start a business in something they've never done before. A lot of times there's like a techie person or a software engineer and they want to start a food related business, right? Like how many engineers that want to start coffee shops out there? I mean, there's so many of them. So that's really important. You know, go get a job at Starbucks if you want to start a coffee shop and see if you like working at a coffee shop. One time we actually did a loan to a woman who loved animals, you know, kind of like your business, Ryan. She thought, oh, you know, I love dogs and I've always grown up with animals and I want to have a pet supply store. And so everything else was strong. She had great credit, she had money to come in with, she had equity in her home, she was buying an existing business that was doing very well, and the only thing she didn't have was actually working in a pet supply store. But we thought everything else is so strong, we're gonna do the deal. We did the deal. 6 months later, she called me, she said, I hate working in this pet supply store. People don't actually bring their dogs in, all I deal with is dog food. I wanted to deal with dogs. So she sold the business, paid off our loan, but it was just a really big lesson learned. You know, have experience in that industry that you want to start your business in.
You know what, can I just add to that? Aside from a lending perspective, or just from a business perspective, that's huge, that you know what you're doing. I mean, there's two kinds of businesses you can start. One is this passion business we always hear about. Follow your passion, right? Well, okay, so if you love gardening, go work at a garden center or a florist or something like that. Because you have to know not just how to do that thing that you love to do, but you have to know everything else. You know, the law and the taxes and the insurance and the marketing and all those things that allow you to do your flowers. Or you can start a business like Jeff Bezos did, which is he analyzed the world and realized that selling books online would be a great business. That's okay, but then you have to learn that world too. Either way, if you don't have a little background, you're just setting yourself up for failure from a business perspective, so let alone from getting the loan perspective. Maria?
Well, from the SBA side, what we usually try to do is to educate you on what you need. For example, if you're a startup business, if you've been in business less than 2 years, you need a business plan. No more than about 10 pages to tell, you have projections and you have a good executive summary. Once you've been in business several years, your financial statements will stand for themselves. But what we try to tell people is make sure you have a good business plan if you're a startup. Get your finances in order. Just get information for what you need. If you have the experience, great. If you don't, I think I forgot her name for a minute. What she had said is that make sure you get the experience. If you want to, you think you might want to do something in business, go get the experience in that. If not, get somebody on board who does have the experience. Because if you don't have the experience, nobody's going to give you a loan. Like she said, IT and engineer wanting to start a coffee shop, not going to happen. But if you go out and work in it, you might find out you hate it. Or you get somebody on board who has many years of experience. That will help bolster your application. But what we just try to do with people is to educate them. We have many programs through SCORE. We work with small business development centers who give you the information that you might need to help you kind of put you all together before you go to the bank. That's why I said the bank is your last stop, not your first stop. And that's what we usually do, is just to help you get to where you need to go to a large bank, a small bank, CDC or Axion.
And I think from my standpoint, it's really predictability, which ties into what Susan was saying. So predictability. If I'm a cop and I want to go in to start up a security business, that makes sense. It's kind of predictable. The ultimate predictability for us as a traditional bank is 3 years of tax returns, because we can track the data points and kind of figure out where it's going. But if you don't have that, you can still paint a picture that gives us a good degree of predictability, that you've got experience, you have good character, so we look at credit, personal credit from that standpoint. The other one is transparency. So don't look at the bank as being the proctor, the teacher that's going to grade you. Go in with a banker, have a meaningful conversation, say, here's where I want to go. Because, for example, we do SBA, startup SBA lending, working capital loans. We do up to $1.25 million startup. Well, have a meaningful conversation with a banker that says, look, this is a startup, it's growing. The biggest use of cash is growth, is a growth of a business. It's really, that's what you should fear the most, is the growth. But you know what, we don't mind if you predict that you're going to lose and lose and lose, and we'll just cumulatively build up and figure out how much working capital you need over the next year. Now, after a year, we want to see that the thing is profitable after a year, after 12 months. But again, if you're losing $10,000 the first month and then $30,000 the second month, and as long as it's a plan that makes a lot of sense to us, we'll go with that. We want to make sure that after 12 months that it turns around. But I think Jeremy's a great example. Look at it. Consider what he could have done. He could have run this business or funded this business on personal credit cards, and he'd be sitting in a different situation. He'd be sitting out there and thinking, I wish I would have had that conversation with a bank 12 months ago, because it led to Axion. It wasn't bank financing, but still, the way he did it, very, very methodical, very predictable, very controlled. That's what we like to see.
Exactly. The thing I'd add is come when you meet with your banker, as Dan was saying, have an open mind. A lot of times, business owners, you're the masters of your own universe. You call the shots in your world. But think of your banker as an advisor, truly. Your insurance agent, when you go sit down and he recommends this type of coverage, you have to consider that, because that person's an expert in the industry, just like a banker would be. For example, yesterday we were sitting down with one of our clients, and has a $2.8 million in revenues, but he's a serial entrepreneur, and he had a whim one day to start another product, and he's manufacturing and packaging and selling on the internet, something totally separate from where he's at. And when we sat down with him, after the long conversation, the advisory, throwing some options out, we decided, he's going to use the equity in his home home to fund that new business until he reaches a point where he can come to the bank and get that done. So there's obviously also other resources out there for him, but since he had the equity, it's a better sense for him, and oftentimes that's not desired, but that was one of the options on the table along with the other alternative lending solutions. And you make the choice, but get all the options, listen to your banker, hear them out. First thing I always do is say, well, if it were me, this is what I would look at doing. And, just take that with a grain of salt, but listen to them and use them for the long term. Obviously, we're going to be meeting with that client regularly over the next 12 months, and we're going to try and get that debt that he's going to have on the business back over to the business itself. So keep that in mind when you come meet with your banker. Have an open mind and be flexible.
I did want to point out from Axion, like one of the big things that they threw out there is they're going to help you out through all these other different steps just from loaning. Like after our loans, they were there to help us with marketing. They were there for other different little programs to point us in the right direction. So they're not just there to just give you $20,000 or $30,000, $50,000, whatever it is. They're going to be there for every step of the way, and you can count on these guys. I was very impressed, definitely.
My SBA loan also came with counseling and advisory. So we had a business specialist come out to our location, and I met with him maybe a half dozen to a dozen times regarding everything from payroll management to marketing, advertising, presentation, customer service. So that was helpful.
So as you see, we have a great group of knowledgeable people here, a mastermind of money in front of us. So please join me in thanking our great panel.